Welcome back to the Integrity365 Financial Insights Podcast. Today, we want to talk about the importance of engaging your whole family with your financial plans, whatever your family setup looks like. Traditionally, many families have seen one sole head of the household where they look after the finances. But we want to talk about the important benefits of making sure everyone is aware and understands your financial arrangements and how this could be improved with your own family and not leaving it until tragedy strikes. We are releasing this episode on International Women's Day, which this year centres around the theme of Embrace Equity, stating equity recognises that each person has different circumstances and allocates the exact resources and opportunities needed to reach an equal outcome. And that is exactly how we as financial advisors at Integrity365 approach our clients. Everyone has unique circumstances, and we provide a tailored approach to help them towards their personal goals. Hosting today's podcast is myself, Sophie Haslehurst. I'm a chartered financial planner, and I'm joined by my colleague and founding financial advisor from Integrity365, Debbie Packer, and Coreena Dutton, who is a fellow and a chartered financial planner. Welcome, Debbie and Coreena.
Hello, Sophie.
I hope you're both doing well today. Sort of one thing that's really struck me, and I know International Women's Day is one of those events that comes around every year, and we don't want it to become a bit samey. But one thing that I've really noticed is the fact that conversations around how families are set up have really changed, especially since COVID. I don't know if either of you have seen that with your clients. I've noticed a lot more equality in the way that people are sort of dealing with things like childcare and responsibilities in the home. Now there's a more flexible working arrangement.
Yeah, absolutely. I mean, for one, I've noticed a lot more of exactly that, flexibility. So people are doing a combination of working from home, working in the office. There's a lot more sort of shared responsibilities over caring, and it's not just caring for children; it's caring for sort of dependent adults, parents, that sort of thing as well. I'm definitely seeing a lot more of that. What about yourself, Debbie?
Yeah, I mean, it's like that in our household. I mean, my husband does the school run and picks up Jamie, and I'm busy kind of doing Zoom calls or traveling across the country doing client meetings. So I think, yeah, but again, with sort of colleagues and family members and friends, seeing a lot more of that sort of equalization of responsibilities in the home, I guess. And it's no longer sort of the same domestic chores for the females in the household. It's a very much a shared responsibility.
And it's really refreshing that we are seeing that change sort of across everywhere, I think, with that generational sort of up change from not just people who are in the working environment, but also as people are approaching retirement, there does seem to be more of a shared responsibility with things in a way that I didn't see even 10 years ago.
Yeah, definitely. And I think, it's as financial advisors, I think we have to be really mindful of that shift and that sort of equalization, and just make sure that, kind of that financial education as well is passed on, and that everybody has that equal opportunity to look after their own finances. I know, I see a lot of people and talk to a lot of people where, maybe one member of the household deals with all of the finances. And that can be a dangerous move if anything happens to that one individual. Really that sort of financial education piece and client meetings should really be on a joint basis, just to make sure that everybody in the household knows what's going on.
Absolutely. I think I've heard quite a lot about that recently. There's even sort of meetings going on that people are doing these death meetings, or they're going through their SADMIN, as they call it, which is where they're almost kind of making sure that both parties of the relationship know exactly what's going on financials wise. So they know where the bills are held, they know where the savings are held, they know the financial advisor's details, even down to things like knowing how the boiler works. A lot of people, older people, are finding it very important and almost comforting to have these sort of like pre-death meetings where they kind of get to know about everything in the household. And although it sounds a bit depressing, it's actually almost quite refreshing for people to know that if something did happen, they wouldn't just be going into free-fall panic about how to deal with the finances. I think it's it's a really different way of doing it, but it's also really important.
And something you highlighted to me as well was the fact that these generations, as they're educating themselves, as a couple, they might have different opinions to if there was one individual making that decision. And sort of you talked to me about sort of the passing on of wealth to future generations and how that might be affected by this equalization of the roles.
Yeah, absolutely. I mean, again, going back into historic sort of views of people, it was always quite, common to have one person in the relationship that was dealing with things. And yes, there'd probably be a lot more males, in years gone by dealing with the finances, and the female might not sort of really have much to do with it. But I've, a couple of clients it's happened to where sadly someone's passed on, and then all of a sudden the other person, be it a male or a female, have just all of a sudden inherited this money and don't necessarily what to do with it, because they weren't involved in meetings throughout, the sort of yearly annual reviews, because it was just the other person dealing with it. So it just almost really highlighted to me how important it is, regardless of whether you're interested in finances or you're not interested in it, but it's important to make sure that you're kind of aware of everything. So, and also that you're comfortable with your advisor, because in the event of something happening, the last thing you want to be doing is dealing with someone that you don't feel comfortable with. You want to make sure that you've got your team behind you, and that would include your financial advisor that you trust.
And I think sort of there was a really interesting stat that we sort of discussed when we were having a brief catch up before. YouGov found that 1,000 adults across the country, which they sort of interviewed, as it were, and only 60% of the sort of generation that we're talking about at retirement, as it were, they intend to leave money to the next generation, which is absolutely fine. I'm sure the other 40 will have a fantastic time spending their money. But of that 60%, only 17% have any kind of formal plan in place. So sort of that conversation around that's one of the key ones that I'm finding anyway, and I'm hoping you both are as well, having those conversations with clients.
Yeah, absolutely. It's massively important. And it's a really interesting stat, because the numbers behind it, in the next decade, the stats tell us there's about £327 billion in the UK that will be passed down to the next generation, as it were, which represents about 300,000 younger people that are suddenly going to be inheriting or being gifted huge amounts of money. And I think as advisors and as the people doing the gifting and passing on that wealth, I think the education that goes alongside it is really important. And having those joined up meetings, having family members and the next generation in those meetings and being aware of what's going on is really the key. So as an advisor, I think it's our job to make sure that goes as smoothly as possible. And of course, the next generation have different desires and different objectives. They really care about things like, the environment and maybe impact investing and, or maybe repaying debts, because, that generation, that society has perhaps a lot more debt than the generation beforehand. So there's quite a few elements to look at and cover off there.
Definitely. And I don't know, Coreena, if you've noticed this as well. It's something that I talk to my dad about a lot. He's very interested in skiing, which is spending the kids' inheritance, because with 6 of us, he feels that he's earned his right to enjoy his retirement. But I know a lot of clients that you look after are worried about things like care fee planning and planning for the future as well. So there's an element of having the plan in place for your life, but also, to be able to pass some of that money on.
Yeah, absolutely. I mean, I'm a SOLA qualified advisor, which is basically somebody who can help people in later life. We all can to a certain extent, but SOLA is just an additional qualification to really sort of make sure that you're well aware of the ins and outs of care fee planning, for example. And I think the key for me really is exactly that, is having those conversations with clients of all ages about priorities. So for example, it might be that you're speaking to clients about things like, growing their wealth, making sure that, they're providing for, next generations and dependents, etc. But also being mindful of things like inheritance tax. And if there's an inheritance tax issue, how can they potentially provide for that? But also not giving away too many assets, because if they do then need care in the home or have to go into a care home, it can be absolutely excruciatingly extremely expensive. So it's really sort of important to make sure that we cover off all those areas. You know, there's different ways of planning for care fees. There's care fee annuities, etc., that you can look at, as well as, you know, investments for income. And there's all sorts of things you can do, but it's really important to make sure that you kind of review at every step of the client's life, really, that they've got the right plans in place, because it's just having that happy medium between gifting assets, having enough for your potential care, also not paying silly amounts in inheritance tax. It's a bit of a minefield, really, which is why it's really important to have that good relationship with your advisor.
That's right. And I know we all deal with clients of lots of different ages and lots of different concerns. But one of the things that I've definitely noticed as well is that there's a lot of information that people might read a headline about, but then they'll come to us and ask some more detailed questions because they might have read, you know, oh, the FTSE 100's up this year, so why isn't my portfolio really up? And I think sort of one of our really important jobs, and hopefully you both agree, is about managing those expectations. So Coreena, you made a really good point there about care fees and how expensive they can be, but how we can manage people's expectations to say it's really wonderful that you want to pass this money on and build this plan, but we do need to have provisions in place for all of these elements. And I know I use cash flow modeling with some of my clients where it's appropriate. Is there anything else that either of you do that you feel, you know, is really important in this area?
I think so. Actually, that cash flow modelling is extremely helpful, because that really showcases our clients, you know, how much they can afford to give away and how much they might need to retain for their own needs. You know, when we talk to clients, we have a duty of care to make sure they look after themselves first and foremost, and then, you know, obviously help their family in that intergenerational planning, you know, in the most tax efficient way. So definitely, you know, looking at a cash flow modelling, that could be a really helpful tool. There's also obviously a number of professionals that we work really closely with. So our wider network as well can help with things like making sure that wills and estate planning is done not just from the financial education piece, but also from the legal side, and making sure all the ducks are in a row. And, you know, we also have portals available as well, which is a really helpful tool where clients can update their information and just make sure they have all those important documents in one place. And, you know, again, that really helps with that intergenerational planning as well.
Coreena, I know there's another area of financial planning that you are an advocate for, that's more for sort of during your working life the majority of the time. I'm really interested to hear about one of your passions, and that's all about the different types of protection.
Yeah, absolutely. It's always been an area that I've been very keen on ensuring my clients are well aware of. But I think probably becoming a mum was also a point that made me, you know, even more aware of the need for protection. So when we think of protection, you know, a lot of us just think of the fact that, yes, we've got a mortgage, we'll need to have some life cover to pay off the mortgage. Some people go further than that, and they think about making sure there's some money for the kids if anything happens to them. And also, you know, things like whether we've got death in service through work, or if we've got, you know, sick pay, that kind of thing. But that tends to be kind of where a lot of people's views stop. So a lot of people don't really necessarily get advice on their protection needs. You might go to, you know, a website and have a little look and see what you should get, and get an off the peg policy that you think would be enough. But generally speaking, that's not enough. And I guess one other thing that I was really keen to make everyone aware of, was especially with this Women's Day, making sure that we're embracing equality, is actually protection equality. Because what we'll quite often find is that you'll have a lot of, you know, men potentially who have historically been the main breadwinner in the relationship, that might well have, you know, adequate protection, but quite often, you know, the female in the relationship might not. I think there was another study, this might have been in the States, but this is done in 2021. It's probably a similar sort of story here, but it said about 47% of women had life cover compared to 58% of men. And actually, when we think about it, there's no difference. Everyone needs cover. If you've got a family, you've got debt, you know, there's, generally speaking, most people will need some sort of cover. It might not be life cover. If you don't have a family, you might need critical illness cover. You might need income protection, for example. But generally speaking, we will all need some kind of cover. And also the amounts of cover that women tend to be applying for tends to be less. So we might well find that some females could be underinsured by as much as 90%, which is, you know, such a sort of massive gap. So if something should happen, be it that, someone passes away, or be it that they get an illness of some description, that can have a massive knock-on impact, not only on the family or on, the relationship, but also on their retirement plans. If you're all of a sudden having to spend all of your savings because you don't have any income protection in place, for example, and you've been ill for a long time, that's going to have a significant impact on when you can retire and how much you could retire on. So I think this is just another really important area that everyone within the household, both relationships should be aware of their need for cover and get advice on it, not just go for an off-the-peg product that they think would be enough. Again, something like cash flow modelling can also help us work out how much cover someone would necessarily need. So that's always been a bit of a passion of mine, and will do so going forward.
No, definitely. And one thing that you're both always reminds me of, and it doesn't matter which one this is, if there is someone who's at home and sort of responsible for the children and doesn't have their own earnings, there's still the opportunity for them to be able to protect that cost, isn't there? And it's something we can all easily forget when we're thinking about all the different areas of our planning, but that's a very crucial role. If there is, whether it's male or female, a main carer for the children, that's a really important part of the protection planning.
Absolutely. I mean, if you think just, kind of what the cost would be if whichever member of the household is at home doing that caring role, and as Coreena mentioned earlier, that could be for a child or for an elderly relative, if that care had to be paid for, if that care had to be bought in, the cost of those services are going up, even though we think inflation has gone up massively in the last year. The cost of those care services have gone up more than that. So, that inflation proofing, that sort of protection, even if people do have protection in place, that review of the level of protection that is in force is really important. And, it may be quite surprising that although a lot of costs have gone up in some fields such as life cover and protection, some costs have actually come down. So actually rebroking and revisiting those protection needs now of policies that have been in force for a few years may actually be a little bit of a cost saving exercise as well. So always worth a review.
Definitely. And sort of one of the areas that I think is always important, and Coreena, you touched on it as well, is just check what you're receiving from your employer, because you might find you've got a really generous package and you don't need to worry about that because that's part of your employment. And I think we can all be a little bit guilty of that. And I know that I was, because actually after we spoke about it, I had a look at what we're offered as employees, because I hadn't even thought about it. Because, when you join a company, it's fantastic and you learn all about it. But if you don't need to make a claim on it, or you're not paying for it because your employer is, you often forget about it.
You do, and I guess some people are almost worried to ask as well, because they think, oh, why are they asking? They might worry that they think they're thinking of using their sick pay, for example, but that's not the case. You should always speak to your employer about what they offer you, but also it's really important to sort of marry off the two. So you've got your work benefits, but you should also consider what you've got outside of work as well. So I've had some clients that have always just relied on their work benefits, for example. Oh, that's okay, I've got plenty of death in service that will pay off my mortgage in the event of me dying or something like that. And then if something happens to their employment, all of a sudden they don't have any cover anymore. They're then going to have to go and source cover, and potentially that might mean that they'd have to pay a lot more, or they might not even get cover at all if they've had a pre-existing health condition. So again, it's really important to know what you've got through your employer, but also speak to an advisor about what you should use that for, and maybe sort of have some additional policies on top of that, just in case anything should happen to your employment status.
And definitely a bit of homework for us all to do there. And one of the other points that sort of leads me on to as well is a topic that I'm very passionate about, which is the pension gender gap, which I don't want to harp on about, because I think it's one of those things, especially on International Women's Day, that we can sort of make too much of a fuss about. But what I've been really happy to read about this year is the stats of the fact that there's been quite a shift. So over the sort of period of time that I've been doing this job, I've really noticed that gap is closing. And again, last year that was closing again. But the reason that there is one is just simply because of historical inequalities. And I think, I don't know about you both, but I've definitely seen more of an equalisation as far as that's concerned over more recent years, as far as sort of the both different couples, both partners within that couple having a more equal share of pension pots and things like that.
Yeah, absolutely. And Debbie, I'm sure you'll say the same. But again, I think that a lot of that is to do with the fact that it's not just the historic male that's the breadwinner in the family anymore. And that's obviously shifting. And there's also this great wealth transfer, isn't there, that's potentially happening over the next few years. And I think that's probably had an impact on it as well.
Definitely. And I mean, it's not a point that any of us really want to dwell on, but I think, there is going to be more and more questions around pensions and divorce as we start to get into the sort of the next couple of years, because there's now the ability to have a no-fault divorce. I haven't seen a huge spike, but I know post lockdowns, there was a bit of that spike of divorces happening and separations in general. So I think it's one for us all to keep an eye out for the future as well, isn't it?
Definitely. And I think the key there is, again, what we spoke about earlier, is that education piece, so that everybody in the relationship is equally as financially astute and aware of what they can do and what options are out there. And I think Coreena touched upon it earlier as well. It's that, if you're talking to both parties in a relationship or a whole family, risk tolerance and views on investments can be very, very different. And it's really important that everybody takes ownership and responsibility for their own investments and their own investment pot, be that pensions or savings. So yeah, absolutely.
Oh, I could talk to you both about this all day. I mean, as you know, we've got so much that we can all say about these topics, and we've covered quite a lot in a very short period of time. But thank you both for being so patient with me. So that wraps up today's podcast episode. Thank you for listening, and thank you to Debbie and Coreena for joining me. As I said, we're really grateful that we have the chance to talk to you all. If you'd like to listen to future episodes, these will be shared on the Integrity365 YouTube channel, website and Spotify in the near future. If you have any questions for our advisors, either to answer personally regarding your own financial planning needs or to talk about future episodes, please don't hesitate to get in touch using the details in the description, where we've also linked some helpful guides for further information on the many topics we've discussed today.